Your life savings can vanish in a single afternoon due to a hidden clause buried in page 42 of your insurance contract. This isn't a fluke. It is the structural reality of a system designed to prioritize corporate solvency over your financial survival. By dissecting the three silent mechanisms embedded in your current policy, we reveal exactly how healthcare bills bankrupt families, starting with the quiet drain on your account that occurs before you ever visit a doctor. Spot to sit. Let's unpack the reality of the system and get into the details. To understand the crisis, we have to stop looking at the cost of care as a simple transaction. It is a complex, opaque, and often predatory financial machine. Most people assume that if they pay their premiums every month, they are protected from financial ruin. But the data tells a different story. A study published in the American Journal of Public Health found that medical debt was a primary cause for over 60% of personal bankruptcies in the United States. Think about that. These weren't people who ignored their health. They were people who had insurance, sought treatment, and were still crushed by the aftermath. Here is how you can start protecting your assets right now. The first trap you have to navigate is the illusion of network adequacy. You might look at your provider list and see a hospital that is labeled as in-network. You schedule a surgery, walk through the doors, and trust that your insurance covers the facility. But here is the catch. The surgeon, the anesthesiologist, or the pathologist might be independent contractors. They can be completely out of network, even if the building itself is not. This leads to the phenomenon of surprise billing. Even after the No Surprises Act went into effect on January 1st, 2022, gaps remain. To avoid this, you must explicitly ask your provider for the national provider identifier numbers of every person who will touch your file during a procedure. Then, you take those numbers and call your insurance company to verify every single one individually. Yes, it is tedious. It feels like extra labor you shouldn't have to perform. But my friend Mark learned this the hard way after a minor procedure in November 15th, 2023. He checked the hospital, but he didn't check the anesthesiologist. The hospital was covered, but the specialist billed him $4,000 directly because they were out of network. He spent 6 months fighting that charge through internal appeals. He won, but only after hours of documented phone calls and formal grievance letters. If you find this breakdown helpful for navigating the system, hit subscribe. I release deep dives like this every single week. Okay, that works for basic procedures. But what if you're dealing with a chronic issue or a high-cost medication that is suddenly removed from your formulary? This is the second trap, and it is far more subtle. Insurance companies change their list of covered drugs, the formulary, every year. They often move drugs into higher tiers or remove them entirely to save costs, forcing you to switch to a different, often less effective or more expensive medication. You need to check your policy's formulary every single year during open enrollment. Don't just auto-renew. If your medication is slated to move to a higher tier, you have to initiate a process called a prior authorization or formulary exception request before the change hits. You need your doctor to draft a letter of medical necessity stating why the alternative is not appropriate for your specific clinical profile. Data from the Kaiser Family Foundation shows that people who proactively manage these requests save an average of $2,000 annually in out-of-pocket costs compared to those who just pay whatever the pharmacy counter requests. It's about being an active participant in your care rather than a passive recipient of whatever the insurer decides. Now, we need to talk about the one I've been saving for you. This is the most dangerous trap in the entire American system, and it affects anyone with an insurance plan that has a high deductible. It is the myth of the annual out-of-pocket maximum. Most people believe this number. Let's say $7,000 is the absolute ceiling of what they will pay in a given year. They believe once they hit that, the insurance company pays 100% of everything else. But that only applies to items covered under your specific plan's network and formulary. If you have a catastrophic event, you could be receiving care that technically falls outside the scope of your contract. Maybe a specific lab test is considered non-essential, or an imaging service is coded as experimental. In those instances, your out-of-pocket maximum does not protect you. You could be hit with thousands of dollars in non-covered charges that never count toward that ceiling. I spoke with a woman named Elena who went through a major surgery on May 10th, 2024. She thought she was safe because she had reached her cap. Then, she received a bill for $8,000 from a genetic testing lab that the insurer deemed not medically necessary for her surgery. Because it was excluded from the benefit, her cap was irrelevant. She had to leverage the ERISA process, the Employee Retirement Income Security Act, to contest the denial. The key here is to demand a letter of coverage for any high-cost diagnostic tool before you proceed. Don't accept a verbal yes from a customer service representative over the phone. You need a written confirmation, dated and signed, that the specific procedure is considered medically necessary and included under your plan. If they refuse, you have a red flag right there that you might be walking into a financial trap. You would be shocked at how many claims are paid once a patient produces that single document proving they were told in advance that the service was covered. Once you see how this game is played, you start to look at your medical files differently. It moves from being a passive experience to a project you manage with the same care as your taxes or your mortgage. That shift alone could save you more than the first two methods I mentioned combined. It's not just about saving money, it's about maintaining your agency in a system that is designed to drain it. So, you have the strategy of vetting your providers individually, managing your formulary actively, and securing written coverage letters for any high cost procedures. If you act on these, you are doing more to protect your financial future than 99% of the population. There's nothing more valuable than that peace of mind. If this helped you gain some control, share this video with someone who is currently navigating their own healthcare struggles and subscribe so you don't miss the next deep dive. Next week, we're going to tackle the hidden fees in your investment accounts that are costing you tens of thousands in retirement. You won't want to miss that one. Stay informed, and I'll see you then.